Dollar Index Daily Forecast, August 20th, FXEmpire.com. The Dixie had a relatively quiet session on Friday. As you can see, it was a slightly positive session, but it really wasn't much to write home about. We had a fairly benign day around the markets for that matter, and as such, we think that we are currently just kind of consolidating here at the bottom of this what we feel at least is a fairly obvious uptrending channel. And with the potential for serious trouble around the world right now, it does make sense that the dollar would continue to get a little bit of a bid. We see if we can get above the 83 level, that really there's nothing that should stop us from going to about 84.50. It kind of depends on the trajectory, obviously. But that would stay within this channel, and truthfully would just be more upward bias kind of grinding. It's not that big of a deal. But there is open speculation that the Federal Reserve will ease over the next couple of weeks, and if they do, that could be very detrimental to the dollar. It remains to be seen. Normally it is. And we would use 81.50 as a trigger price. Once we get below 81.50, we think the momentum has changed enough. Yes, there's a little bit of a gap there, but on the big scheme of things, when you look at the charts, it's really not that significant. If we can get down below 81.50, or even if you want to skip below the gap and hit 81, that's fine. That should send us down to 79 in relative quickness, we think, because it's a bit of an air pocket down there. However, we still feel with all of the issues going on in the world, it's going to be difficult to bet against the dollar over the long run. We are currently just kind of riding this wave of support. It's probably low volume, mix of that, and just the fact that there's really nothing pushing the markets right now. So that's why we continue to grind sideways with a slightly upward bias. We don't see any reason why this would change. And of course, a breakout over 83 gets us very interested in buying the dollar index.